Hi, this is Arn Cenedella, Spark Investment Group from Greenville, South Carolina. Thanks for tuning in, and hopefully, you'll find my comments helpful to your own investing journey. Just offering my perspective doesn't mean it's the right perspective, but it's the way I've approached real estate investing for 46 years now. I got into the business 1978, bought my first property 1980. I was all of the age of, I think, 26. And since that time, I've built a single family portfolio in the San Francisco Bay Area, Austin, Texas, and now Greenville, South Carolina. About 4 years ago, moved into the multifamily space and primarily now operate in my new hometown, Greenville, South Carolina. So these are my opinions. This is what I've learned and observed over 46 years in the real estate business. And I understand other folks, equally professional and knowledgeable, may have a different perspective, but I'm just offering mine for consideration. So let me back up, and I don't do this as a brag, but I'm a relatively smart guy. Was a National Merit Scholar way back in my high school days. Went to Colgate University, got a bachelor's of science in chemistry, and then on to the University of Michigan, where I got a master's of science degree in physical chemistry. Did well in school, graduated cum laude or whatever it's called, magna cum laude. So I'm a fairly smart guy, and I've been in the real estate business 46 years. That being said, I also have some humility and kind of understand to some degree, I have no idea what the world's going to be like 5 years from now or 10 years from now. And I think if anybody really looks at that, they'll have to acknowledge trying to predict the future is a difficult task. And often we're way more surprised than we had it all dialed in. I mean, if you go back to the day, personal computers, fax machines, and you look now and you have a computer in your phone that back when I went to college took up an entire building, instantaneous communication, COVID, so many things happen that I think it's just difficult to really with confidence believe that one really knows what the future is going to be. And so how does that all relate to real estate? Let me bring it back to that. So there's often a debate about timing the market versus time in the market. And I've always been a time in the market investor. I don't believe people can consistently and accurately time the market. I would submit the top or the bottom of any market is not known until 6 to 12 months after the fact. And let me just pose a question for folks to ponder. Most of us in the real estate space are familiar with the subprime crisis, the Great Recession, 2008, 2009. Fair degree of foreclosures, primarily limited to the single family space, though much of what happened then we're now seeing played out in the multifamily space with the floating rate bridge debt, which is analogous to the adjustable rate, no doc, no qualifying loans that were very popular in the residential space leading up to the subprime crisis or the Great Recession. So let me ask you a question. If you had bought a property in the year 2004 and you sold it in July 2008, And remember, the subprime crisis hit October 2008. So you bought in 2004, you sold June 2008. Here's the question. Did you sell too soon, or did you sell at the right time? Or let's add another question to it. If you bought in 2004 and you didn't sell into 2009, did you sell too soon or too late? I would say the answer to that question is not clear, because the value of that property in 2023 and 2024, in almost every case, well exceeds the value in 2008, 9, and 10. So one could say if you bought in 2004, sold June 2008, you sold at the right time because you avoided the subprime crisis and the drop in value. But it's also true, if you held that property to today, it would probably be worth 3 or 4 times what you sold it back in 2008, 2009. So just ponder that a little bit. I pointed out simply to indicate the top and bottom of any market is a function of the time period you look at. So I submit it's not an absolute data point, because life keeps going on and the market keeps changing. So personally, in my own opinion, I don't think you can time the market, or that's not how I approach it. Instead, I believe in time in the market. And what that means to me is you buy good properties in good growth locations. You buy the properties in a prudent manner, which in my mind means relatively low leverage, fixed rate debt. You also go into it with ample cash reserves, and you take a long-term perspective. And if you approach investing that way, it doesn't really matter when in the cycle you buy, or whether you're able to be a genius and time the market exactly. If you set it up that way, you can hold the property long term. And I think we'll all agree the historical trend in terms of the value of real estate, the cost to rent residential real estate is up. In my life experience, the graph basically looks straight up, maybe a few little dips. In my experience, you got 5, 6, 7 years of up, maybe 1 or 2 of a slight pullback, maybe another year or 2 of kind of a plateau, which just simply sets the floor for the next run up of 5 to 7 years. So if you buy property in a prudent way and take a long-term perspective and are able to hold that property long-term, you're going to win. So if you own a property 10 years, there may be a period where the value drops. No big deal. If it's still cash flowing and supporting itself, you've set it up properly. Who cares if the value has gone down a little bit, because ultimately it'll recover and ultimately it will increase. And so I don't worry so much about trying to time the market. Instead, I try to buy quality property, quality locations. And for me, if I find a property that I can make the deal work today, and by that I mean you can structure it in a way that the property's self-supporting, meaning you put in a certain amount of capital to buy it, and maybe you budget some CapEx money, but you invest a sum of money, and from there, the property self-supporting. You never have to put additional capital in the property. You simply operate it and let time win the day for you. That's how I invest. It may not be sexy, but I think it's proven, time proven, battle tested. If you approach investing that way, you're ultimately going to win. To express it another way, who are the people who have ever gotten hurt owning real estate? I would say there's a common theme there. The people who get hurt buying real estate are ones that over leverage the property and go into it without ample cash reserves. And so they're on a very thin margin. And when Murphy's Law strikes and you need a new roof or the HVAC unit goes out or the economy weakens and rents drop a little, there's no buffer, there's no security there. And you're now in a situation where you're forced to sell in a down market. As long as you prevent that situation from evolving and occurring, I submit you're going to be in good shape with a long-term investment approach. Just keep investing, structure it properly. Again, low leverage fixed rate debt, ample cash reserves, and know how to operate the property. So be competent in the operation of the property. And if that isn't you, then find a partner or a property manager or an asset manager that can run that asset for you in a professional manner. You do that, you're going to be happy with those investments. 5, 10 years, 15 years later, you're going to be happy you bought those properties. And you're going to look back and you're going to go, I can't believe I paid X for that property that's now worth Y. Not sexy. Don't have to be the smartest guy in the room, smartest gal in the room to do it. You don't have to be a genius. You don't have to be a clairvoyant. You just stick to the time-tested fundamentals of real estate investing, and I think you'll be happy with the results. So hopefully this helps a little bit. I know right now people are nervous about the market. I'm still a buyer. I'm happy to buy good property in good locations that I have logical, rational reasons to expect the area to prosper in the future, grow in the future. For me, real estate investing is kind of like, I don't want to use the word bet, but it's investing your capital in the belief about the upward trajectory of a location. And so if you know your markets and you pick the right market and you buy quality property, I believe you're going to win over time. That's how I've done it. Again, not the only way to do it, but that's how I've done it. And I just ask you to consider that. And does that approach resonate with you? Does that make sense about a way to go about? We all have obligations. We have responsibilities. We have family. We have children. We're thinking about how to put them through college. We may have parents that need our help. We have lifestyles to support. And so I think real estate investing can be done in a secure, safe way, building for your future and net worth while still maintaining your current lifestyle. So that's what I like to help people do. And again, it's nothing mind-blowing or sexy, but it's worked for me. And I think if you try it, it'll work for you. So thanks for a listen. Happy to chat and hope to talk soon. Thank you.